Morning, Steve here in Chicago with the morning grain comments. Well, it's cold here in Chicago, and it's the first day of November. A lot of people were wondering if we're going to have similar November price ranges in the grains as we did in October. Still have a lot of unknowns as far as the market is concerned. First of all, we don't know what the final crop size of U.S. corn and soybeans. Today, supposedly they're going to have a meeting to discuss where the President of the United States and President of China is going to meet to sign a Phase 1 agreement. And we'll kind of see what the shopping list is for U.S. ag products. Certainly, U.S. exports need a shot in the arm from China to support prices. Because of the delay in the harvest, cash basis levels are pretty firm, especially in the corn, as the pipeline gets pretty thin. And we did see a good stopper in the soybean deliveries overnight, and we also saw more corn receipts canceled. So basically, you have no wheat receipts, we have a stopper in the bean receipts, and you've seen almost very little registered receipts for delivery for the corn open right now. As far as any other news, yesterday all wheat sales were running 11% ahead of a year ago, and USDA is forecasting a 2% increase. Corn sales 48% behind, and USDA is talking about an 8% decline, and soybean sales are running 10% behind, while USDA is talking about a 2% increase. So not only do we have all this, we also be watching the Fed to see if they lower rates or kind of slow down that pace. Yesterday, markets were nervous that they might slow down the pace. In 2020, we're wondering to see, number one, if they're globally we're going into a recession. It's interesting that let's say a month ago, there was about $17 trillion in negative interest rates globally. Now that number is $13 trillion. So it seems like some of the accommodation that's going on might be helping global economy. And then obviously we'll be watching all the politics drama that's happening in Washington and see what kind of impact that has. I think most manufacturers have pulled back in pushing capital into their production and slowing productions because they just don't know what the consumer is going to do in 2020 with threat of recession and threat of a possible impeachment or a new president in the White House in 2020. So South American weather looks like it's going to be normal. About 75% of Argentina should be getting rains. Most of Brazil will be getting rain, so that's good for the crops there. Here in the United States, as I mentioned, we're cold, but the forecast calls for a drier pattern over the next 2 weeks, but still temperatures below normal. So from a harvest standpoint, we should be getting some work done over the next 2 weeks as the ground freezes up. We just don't know what that final yield is going to be. I don't know if the USDA is going to give us anything bullish on November 8th. I think we're still waiting for some harvest data to see what those final yields are going to be. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.